We had a rough week for the weekly paying dividend ETFs. Our account is down quite substantially from the last time I put a video out about this, but there is still some good news. We are up today and we are up overall. So that is what I'm really happy about. I'm excited. We had some really solid dividends, some pretty crazy dividends paid out just this week alone. And we had some crazy dips in the market, which we're going to talk about all of that and more in this video. So if you guys are new to the channel, I invested roughly $100 into all 8 of the weekly paying dividend ETFs, and I've been tracking their progress over the last 3 months. So it has been really fun. I've been really interested in it. I shouldn't say 3 months. It's been 12 weeks. This is the 12th week update. And it's just been super exciting. So we're going to do a full breakdown today in this video. If you are interested in making money in the stock market, in dividends especially, ETFs, don't forget to like the video and subscribe. It helps me out a ton. I'm trying to get to 5,000 by the end of 2024. And if we hit that mark, I will keep doing this all the way through 2025. If we don't, I'm still going to do it anyway because it's really fun. So thank you guys so much for watching. Let's roll the intro. One really important factor with this is some of these are so beaten down this week alone. It has been a terrible week, in my opinion, for these funds. So as you can see, I have this calculation up here. I calculated it out based off the 12 weeks of returns. We are returning 0.44% every single week. Now, that is insane. And so if we actually multiply this by 52 weeks in a year, you're looking at a 23% return on the account itself. Now, this is not solid. It's not great, but hear me out. We have one fund. We have a few funds that are weighing this thing down insanely badly. So without those, we would be in a significantly better position. But we'll see. We'll see all that at the end of the video and more. I'm going to pull up the dividend tracking spreadsheet that's available in our memberships page, and I have a full breakdown of everything on there, the prices, everything I bought, and it shows kind of the progression of this account and what's been happening. So we did have a really rough week in the market. You guys can see already on screen there's some really deep red that we've seen, and just by price alone, we've dropped quite a bit since the last video. I think the last video we were at $863-ish, so a $20 drop in a week is tough for an account of this size. Now we are up today. It actually is up quite substantially today, up $8.50, and in the aftermarket it's still fluctuating a little bit, but I am still very impressed with a few of the funds in this account. I'm so impressed with how some of them performed. I bought them in my Roth IRA, my retirement account, where I have drip on there as well. So we do have drip on in some of these. You can see YMAG and YMAX, they are dripping. And now someone did point out in the comments, and I do understand the confusion when it comes to drip. So I use drip probably in a way that a lot of people don't. Drip initially is just reinvesting back into the initial fund. So if you drip QDTE, you're only buying QDTE. That's not how I'm dripping with this account. So that might be an inaccurate use of the term even. I am dripping all the money. So IWMY, QQQI, and WDTE, all that money that pays out from those dividends is not going back into those funds. It's just dripping into the account. So the account is continuing to grow. It's not going back into the initial asset. It's going to go into the ones that are actually performing better. And we're still tracking all the progress regardless because all of that is factored out on the spreadsheet. But I wanted to clarify that. I do appreciate all you guys in the comments for pointing stuff out. If you have questions about anything, let me know. I am happy to discuss it in the comments. And you guys have been great with supporting me. Again, we're almost to 5,000 subscribers, and I can't even believe it. It's absolutely crazy. But let's get into the fun stuff and check out the details with each of these dividend-paying ETFs. Starting off with the biggest loser, IWMY. Absolutely terrible, down 12%. 12% in 12 weeks. It's dropping 1% a week. And I'm going to be honest, guys, we knew this was going to happen. I bought it anyway. Yes, it's my money. Yes, I'm losing dollars. That's okay. Like the video. It helps me make more dollars rather than just lose dollars. I'm just kidding. But still, we saw a crazy drop. This is one because of the dividend, I'm guessing, but it might have just been a big drop in the market. We had a terrible day last week. My own account was down quite significantly just over one day. I think the entire market was red. So we saw this thing drop. It has not come anywhere close to recouping those losses. And the dividends being paid out as well, really hurting. AUM, 111.55 million, and the dividend yield, 114%. I say this all the time. It can't keep that up without NAV erosion. If you think you're going to yield 100% on a fund, then without NAV erosion, I don't know what to tell you. If you want to buy this fund anyway and factor out the NAV erosion like I do, you can do that. That's why I do this for you, so you don't have to do that. But if you want to do it yourself, I recommend, just track everything, do your best, and see how it goes. If you want to trade differently than me, I don't knock you for it. I think everyone should trade their own style. So what we're looking at, last 4 dividends, We can see a 36-cent per share. We have 25.7 cents per share, 32.5 cents per share, and 27 cents per share. So not low, maybe a bit on the lower end, but still not terrible. I was kind of surprised. Usually this thing pays out a huge dividend when it drops this much, but that just kind of points to the direction that this was actually dropping because of the market, not because of the distribution. So again, IWMY, not happy with it. The other Defiance funds are also not doing well. So we'll just check those out. Let's go into QQQY. Right off the bat, we see $34.37 per share, and now it's at 32. So a pretty bad loss. We're down almost 7% on QQQY, and I was disappointed in this. You know, a lot of this has to do with the market right now, but this fund was holding on a lot better. Is it going to bounce back up? I really hope it does. We've never seen it really bounce back up that well, so I'm not holding out for it. But that's the thing. We don't know how these perform in a down market. We don't know how they perform in a bear market. We haven't seen it, and I'm really curious to see how they do. Now, I would assume that selling puts and selling calls would make a drastic difference whether you're in a bear market or a bull market. Just off the top of my head, I would assume that in a bear market, calls would be better, but you're also higher risk of being called, and vice versa with the puts. So I don't know, but if these are supposed to be doing better selling cash secured puts in a bull market, they are not. And so that's an indicator that I don't like it because we are still down. We can see AUM 173 million and the dividend yield of 85% roughly. Now, just disappointing for this week. You know, I'm bummed that it's dropped, but we still are showing some pretty good strength with some of the other funds. We see a dividend, last four dividends were 28 cents, 23 cents, 28 cents, and now 23 cents again. So pretty consistent at least. You know, I'm not bummed about the consistency of the dividends. They have been solid, but you have to keep that NAV up if you're going to really make a good return on these. And it's a lot easier rather than having to calculate all this stuff out yourself when the NAV keeps dropping and your returns are all over the place. But again, that's the whole point of this challenge. So I still like these for entertainment. I don't think I would buy them in my own account. I don't own them in my own account rather than the Defiance ones anyway. I do own all the others, but that's not financial advice. It's never financial advice. I have to say that. But let's go ahead and check out the last one, WDTE. With WDTE, we see down 5.62%, which is bad, but not as bad. Like RDTE is down just as much. So I'm kind of surprised that this one's holding up so well. We have an initial cost of $42.18, and currently it's $39.81. The chart is a lot better looking. I'm not lying to you guys. The chart is a lot better looking than I had expected. That doesn't mean I'm buying it. You guys know that I'm not buying this one, but it's held up a lot better than the other ones. IWMY has just been such a disappointment to me. It is down double digit what this one is, and QQQY. So it's dropping twice as much, and it's not delivering double the dividends, and that is the factor of why I'm not buying it. So we can see it is coming up a little bit. We did have a bit of a green day today, which is nice. The AUM of 85 million and a dividend yield of 53%. So a little bit better. Not a lot of volume going on with these. It's around Christmas time. Everyone's money's wrapped up in gifts rather than being in the stock market. People aren't really buying things as much, I would say. Once we get around tax time and people start maxing out their retirement accounts, I imagine we'll see a little bit of a jump. But typically, correct me if I'm wrong, I know September is always the worst month. I shouldn't say always. September is typically the worst month of the year for buying. And I believe that January, February are not good either. I'm not sure. Let me know what you guys think in the comments down below, because typically I wait to buy stuff until after those months have passed. Usually there's a big Christmas rally, the Santa rally, and then it kind of sells off after that. So I'm interested, maybe after the sell-off, if there is one, I'll buy more Amazon. I'll buy stuff like that, buy some AMZY, see how that is going to pan out for 2025. But all in all, not surprised it's dropping. Everything dropped. That's why the account is red. But again, we're still positive, which I am super, super happy about. Last four dividends, we had 28.85 cents a share, 20 cents a share, 20 and a half cents a share, and now 18 cents a share. So definitely on the lower end, actually the lowest that we've seen. So bit of a bummer there. That's really going to affect our total return on this one. I'm not surprised by that. I wish we had a higher dividend, but when it comes to the Defiance funds, you never know what you're going to get. They kind of continue to disappoint. So speaking of disappointing, let's go into the worst performing RoundHill ETF, RDTE. So we're down 5.5%. I'm not happy about this one, especially because I bought another share of it right before the drop. We have an average cost of $44.36, and currently it's trading at $41.90. RDTE was supposed to be the chosen one. It is near all-time lows, if not at all-time lows. Looks like it's slightly above all-time lows. Still rather disappointing. Might be a good time for buying some more. I wish I had waited to buy more, but I didn't, and so I kind of ate the loss on this one. But it is, I believe it's still going to be positive when I do the full wrap-up. I haven't even looked at the actual returns because I like it to be a surprise when I first show the spreadsheet. But I'm still a fan of these ones. I still think that RoundHill, all their new funds that are coming out are going to be great. I'll link a video at the end for all their new funds. If you guys haven't heard the news, they are putting out, or they have a prospectus to put out a bunch of new weekly paying dividend ETFs. We can see 179 million assets under management, and we see a dividend yield of 10%. It is slowly rising because it's not accurately calculated based off of paying out for the full year. It's only calculated paid off for the time it's been trading, which is months, So that is not accurate. It should be above 30%, I would estimate. We've seen some selling, a lot of selling recently. The Santa rally didn't really come. I mean, we had such a good run up prior to December that I'm kind of not surprised that December's kind of been flat. I typically wait to buy until everything's leveled out. I think AMZY might be a good pick once Amazon kind of settles down. I haven't even checked Amazon. I own it, but I haven't looked because I don't know. I just haven't looked. I'm more focused on the dividends. But I am debating doing a YieldMax account for 2025. If you guys are interested in that, let me know. I'll basically pick 10 of my favorite YieldMax ETFs, put them all against each other, and put that account against the weekly paying dividend account. Now, I wouldn't use YMAG and YMAX in that account because I would want it to be monthly payers, but still, I think it could be really fun and really interesting to track how the YieldMax funds return. Maybe if the market goes down a little more, could be very, very entertaining. So let me know what you think about that in the comments, as well as which funds I should buy. There's a few huge ones that everyone talks about, but do you have any off ones that I should purchase? Let me know what you guys think. So last four dividends for RDTE, we have 32.7 cents per share, 28.3 cents per share, 37 cents a share, and 26.5 cents a share. So we are down with our distribution for this one as well. Not all-time low, but on the lower end. Again, these things fluctuate. It really depends on what's going on in the market, the implied volatility, and all of that good stuff. The price return we know is down because the market has continued to just tank. Like that day was terrible. December 18th, awful day in the market. Let's go to our better performing RoundHill funds, starting with XDTE. So XDTE is only down 1.55%, and I believe they paid a massive dividend. Our initial cost was $52.31 a share, and currently it's at $51.51. Or $51.50 actually. XDTE, I've said it once, I've said it 1,000 times, their chart is way better. Typically it will drop and then bounce back, but a steady growth chart, and they're still paying out those nice dividends. You could time this one super well if you just wanted to wait to buy in. We are at a lower end, but still not the lowest that we've seen. So I'm happy with XDTE and the return. It has a higher AUM of 280 million and a dividend yield of 18.61%. It's actually higher than that. Like I said, with RDTE, it's not factored in all the way on Moomoo. So Moomoo is doing a bunch of giveaway stuff. If you guys are interested and you want to open a new account, let me know. You can check out I'll do it in the description down below. We get some money for the channel, I believe. I can't even remember, but it's like a partnership where everyone that signs up with my referral, you guys know the deal. So it helps support us. If you don't need a new account, don't do it. It's a waste of time unless you want the gifts that they give. Hopefully, I do like Moomoo. I'll be honest, I do like it. I think it's done really well for this challenge specifically, and I would use it as my normal broker if it had. I don't know if it has a Roth option, but I do like it more than I've liked Robinhood, and I do like it more than it's about the same as Webull. There's a lot of good ones out there, but I do like their notification system and stuff as well. So last four dividends, we've seen $18.5 cents, 23.5 cents, 15.3 cents, and 64 cents. So a huge dividend. This is without a doubt the highest that I think we've ever seen from this one. It's nearly, it's 4 times what it was prior. And I wasn't joking. I put it in the spreadsheet and I had to double check because I was like, there's no way. So that has been insane. It did have a crazy drop still in price appreciation, but that distribution was wild. And we'll get to that. First, we have to check out QDTE, the other semi-successful one in this account from RoundHill. QDTE, it's so funny because I didn't buy an extra share of XDTE and it boomed. I did buy an extra share of RDTE and it tanked. That's just how it goes, guys. We should make an inverse ETF to the trades that I do because you'd probably make a lot of money. Now, QDTE, average cost of $42.39, current price of $41.87, down 1.23%. not bummed out about this one. Took a really big hit in the market. That's why I'm not scared about it. 622.95 million, 29% dividend yield, which is wild. I am happy with this one as well. Like I said, I own all of the RoundHill funds all of the weekly RoundHill funds in my own retirement account, and they've done pretty well. So we had some crazy volume on December 18, some crazy selling. The market sold off quite a bit. I don't know if it was like a false bear move downward. I don't know if there was news that came out. I was not paying attention. I've been so busy. Oh, I proposed to my girlfriend. That is what I've been so busy about. I apologize. The channel's been in a little bit of a messy spot the last week or so. It was stressful. She said yes. I'm going to be getting married, and I love her so much, and I'm so excited. I'll be posting a photo on the community tab for those of you that are interested. I'm very, very lucky. She's a phenomenal woman, and we're very blessed. So that's why I might seem like I'm a little out of it, and I might be a little out of it. It's just been one of those weeks, and it's also the holidays, so things are busy, but I still enjoy doing all this stuff. This is not work to me. I hope you guys know that. I love doing this. I've been doing it long before I had 100 subscribers, let alone 4,000 or 5,000. So I'm going to keep doing it. I appreciate you guys for your support, though. So last 4 dividends, we had 22 cents a share, 23.6 cents a share, 16.4 cents a share, and 86, almost 87 cents per share. So this one paid out huge too. So why is RDTE the one lacking? What is going on? I don't understand why the one I bought extra of continues to drop. Let me know in the comments if you guys know. Why are these dividends so huge? I factored that one in on the spreadsheet too, but I didn't notice it was that much larger. I mean, it's even a larger disparity than the other one, than XDTE, which is crazy. Let's just check out YieldMax, and we'll jump into that spreadsheet and get answers to all of these questions. On to YMAG. This is the best performer in the account, it's only up 4%, but still, that's really, really solid for just 12 weeks. We can see that the average cost was $19.19, and currently it's trading $19.93. It's even jumped since we started filming a little bit, which is phenomenal. With the chart, I mean, we see the buy. Every time I get paid, it buys out. That's the power of drip. It's literally all of these dividends are going right back into it. You can see I bought this much here, this much here, this much here. And the key thing with both YMAG and YMAX is, look at this. I'm up to over a quarter a share. So I've already gotten 1/4 of a share just from owning YMAG, and it's up 4%. So you really can't go wrong. I don't know how I did that. You really can't go wrong with that style of return. I love it. I love reinvesting. I think it's so key to longevity in the market. Especially if you start young. If you don't, it's still really powerful. 5, 10 years, you can still make a lot of money. So looking at YMAG, like I said, we are up, especially since going weekly. The charts have really switched over. It's just been growth after growth. Even after a dip, I really, really like these. People don't like them as much as some of the other YieldMax. Now listen to me. I know you guys love MSTY. I know. I get 5 comments a video on it, and I'm not upset about it. I love it too. I think it's a phenomenal fund. I think the return has been insane. My only thing with that one, with MSTY and NVDY is it worth it? How are they going to do in 2025? And that's the thing, is YMAG and YMAX are more diversified. So I feel better owning more of them because it's safer. And, that might have lost me money in the future. I'm sure it did on MSTY. I didn't just dump a bunch of money into it because I wasn't sure. But if you like to trade that way, that's how you should trade. You should trade how you want to. But again, I like YMAG. I like diversity. I like YMAX. I like a lot of the other YieldMax funds as well. But I don't think we should knock these ones just because they're returning less. Just because, remember the market that we're in right now. If we're in a bear market, I guarantee your returns would probably swap, and you'd probably see better with more diversity. That being said, good luck with MSTY. I'll probably put it in that YieldMax account that I was talking about because it has done so well. YMAG, 287 million AUM and a dividend yield of 33%. Really, really solid. I hope they can keep that up. I hope they can keep up the 4% every 12 weeks. That's been phenomenal. Last 4 dividends, pretty nice. We have 20 cents a share, 27.7 cents a share, 16.8 cents a share, and low 6 cents a share this last week. We've seen 6 a couple of times. That's usually depending on the cycle of the underlying funds, right? Because the Mag 7 guy, I always forget. Microsoft, Meta, Nvidia, Apple, Tesla, Man, I only have 5 this time. How am I always this bad? Do you guys know the ones that I'm missing? Apple, Tesla. I'm just blanking. I can't even believe it. I always forget some. And usually it's the ones I listed first because I was like, I'll list those first so I don't forget them. Anyways, there's 2 more large funds in there I might remember at one point. But still, so those pay out on a different schedule. So sometimes about once a month you get a really low dividend. And that's okay with me. Pretty solid return. We've seen it being purchased up some more. I'm happy with this one. Let's check out YMAX, which is definitely the fan favorite. Google and Amazon. How do I forget Google and Amazon? Absolutely crazy. YMAX. Average cost of $17.60 a share. It's currently trading at $17.65, a 0.28% return. Nothing to write home about, but the chart looks good. I would say that this is a good-looking chart. We're seeing a slow upward trend. We have it coming up and down, and that's normal as long as it keeps going back up after it goes down, which is what we're not seeing with the Defiance funds. Huge AUM, $645.5 million, and a dividend yield of 41.32%. Absolutely insane. And we've seen nothing but growth from these. Look at this chart down here. Can you really see? Okay, let me shrink myself down a little bit. Look at that. We have seen nothing but consistent growth all through here. Like, it's been crazy. Uptick in volume, even on red days, there's just more volume coming in. And even on this drop, like the next dividend is going to pay out. We're going to buy another share or another portion of a share at a lower cost and then hopefully recoup that loss as well. I'm happy with YMAX. Let's check out the dividends. 30 cents a share, 23.7 cents a share, 12.2 cents a share, and 14 cents a share. So a little bit of a lower dividend still. Not happy about that, but it was an interesting month in the market, an interesting week in the market with that crazy day on the 18th. So not bummed. I hope the trend swaps back up and we keep seeing some good returns from YMAX. But until it starts going down consistently, I'm holding this one, and I am along on it 100%. So now we've looked at everything. We looked at all the different ETF types. We are going to jump into the spreadsheet and track all of the returns and see which ones have made us money, which ones have lost us money, and everything in between. We are back on the dividend tracking spreadsheet. We can see all of our stuff here so far. We're going to go over the weekly dividend log. So we can see all the dividends that have been paid out so far, which is absolutely crazy. You'll notice the gap because the Defiance funds didn't pay out at the same rate, and then they started paying out, which is great. But we've seen nothing but falling. Like, I mean, 81 cents from IWMY. What, is that a new low? No, 77 cents was a low. But still, it's just like, what is going on? What is cool is we can see they're paying out roughly 5 times a month. Usually the end of the month or the beginning of the month will miss one day, and that's fine. But I like how often they're paying out. We should get at least one more dividend from December. We should get another one from December. But I'm really, really curious as to how these ones are going to pan out compared to the others. Same thing with QQQY, 69-cent dividend. That one was tied for an all-time low. If the NAV is falling and the dividends are falling, something is wrong. I was thinking we would get $1 something from IWMY. Because when it pays out over $1, that's when it gives me hope in this fund. You might notice, anytime it pays out more than $1, I'm like, wow, this one might actually do it. It might bounce back. It never does. So I don't know. But QQQY, same thing. It's now down even worse. We're not even anywhere near $1 like we were a couple of weeks ago. WDTE, 37 cents, a new all-time low by 3 cents. So we're not even just like averaging out. We are now reaching all-time lows of the Defiance funds, and that's why I'm not putting drip for them. And then we have QDTE with an insane payment. Yeah, it was massive. How did I not notice that? $2.61. That is insane. That's absolutely insane. Like, look, it makes me want to double check. So if I go to notifications, go here, and we can see where is, we have YMAX and YMAX on here too. QDTE, yeah, 261. Absolutely insane. That's insane. 261. I'm not going to get over that. XDTE, $1.28. Now remember that QDTE, we did buy another share around this area. It did pay out a terrible dividend last week, so maybe they're trying to recoup that. But our dividends should be consistently higher now than they were prior. I believe in December is when we bought that other share. XDTE, $1.28, even though we didn't buy an extra share. So we have, 4x the dividend prior without buying another share. RDTE was lower, but with the last 2 weeks, we did have that other share factored in. And so it is. 79 cents is a pretty good dividend. It paid out really high a couple times. It's not the highest that we've seen. It's right around the middle of the pack. YMAG, 31 cents. Really low really, really low. We have seen a few of these, but typically it pays out near the end of the month. So we're kind of on track. And YMAX, solid, 73 cents. Not a low, not a high, kind of right in the middle. So happy with those returns. All the dividends are broken down on here, which is great. If we jump over to the monthly, we can see what we've made in December so far and from the fund so far. So IWMY, $12.25 paid out in dividends. QQQY, 10.10. WDTE, 6.27. QDTE, 8.98, which is insane because remember, we just paid out $2, $2.61. So huge week, absolutely insane week. XDTE, 6.47. Again, another huge week. We have another week in December, hopefully, that we're going to get a payout, and we already passed what last month was. We already passed November's return with QDTE for just dividends paid out. XDTE still has a way to go. RDTE, $8.67, $11.98 from YMAG, and $12.27 from YMAX. Still the highest returners. Besides IWMY, but we don't count that one because it's down so heavily. But still, the highest returners, really, really solid. They've been going up or trading relatively above what we purchased them for and still paying out those insane dividends. Let's jump into our positions tab and check out the total return and the market return for each of these ETFs. I never did show the dashboard home. We can see we're making $1 daily, $7 weekly, $30 monthly, and $364 annually, which is absolutely insane. When we go into our positions tab, I'll slide all the way over, and we can look at our returns. All the Defiance funds near all-time lows. Some of the funds near highs, XDTE is up, and YMAG is up. Some of the others kind of in the middle, not terrible. Market return. So market return is just based off the cost that we put into it versus what it's worth now. So we're down on all of them except for YMAG. Total return dollar-wise, with our dividends included, it shows that we are up on all of them except for IWMY. So percentage-wise, we want to factor all of this stuff in and look at our total return. So with dividends included, some of these are still down. Well, not some, just IWMY, down 4.15%. We've seen good returns from QQQY and QDTE. And WDTE. Like, this is pretty solid. If you think about it, in 12 weeks, getting a 4.4% return, that's good. 3%, not great, but not bad either. It's been 12 weeks. It's only been 12 weeks. Then we have a really good return. QDTE is up 5.34%. A really solid return from XDTE, 4.73%. But again, XDTE compared to WDTE, they're pretty close. And I don't like most of the Defiance funds because everyone says that they lose, and they are losing compared to the others. But if you don't buy IWMY, these might still be some good options. Then we see that RDTE beaten down heavily. Market return down 6%. Total return 40.43% up. I wish it was 43% up. And then our winner for this week is YMAG. Once again, that's back-to-back weeks. YMAX was the winner the last month before that. But we have YMAX coming in at a total return of 12.85% and YMAG at 15.24%, which is, again, insane. This is in a matter of 12 weeks, everybody. It's just crazy. I will be buying some more once we get our cash allocation up. I'll be buying another share of XDTE. It will take probably at least a month or month and a half with how the dividends have been paying out. And if we keep seeing the Defiance funds dropping and paying out less, it might even take longer than that. One thing I was thinking about that could be cool is if you could utilize. Now, I'm not a tax expert. I don't say that I am. If you could utilize these funds, no, because the problem is you're taxed on the return anyway. But if you wanted to buy these funds, get paid out a cash dividend, and then offset your gains from other funds with the losses from these when you sell them at the end of the year for your taxes, that could be interesting. I don't know how any of that works. I'm not an accountant. My dad is. He didn't teach me any of that. I didn't want to learn it. It's not that he didn't want to teach. But that could be something that I would look into. It could be a cool way, maybe a tax loophole or something like that. And then I don't have the dividend growth rates factored in. There's a lot of details. But total dividends is accurate. We're up to date. Percentage of total income is really cool. Annual income based off of what we've received is kind of insane. So we are looking at getting the most from IWMY. Little do they know that it's going to drop. My cat is currently chasing his tail. QQQY is supposed to pay out a hefty amount. Same with WDTE. But it really all depends on what you're wanting. If you're wanting more dividends and NAV erosion versus just solid dividends and maybe even a little growth from the YMAX funds. As always, if you guys are interested in this spreadsheet, it's available for supporting the channel for my members. as well as all the updates. I would love if you guys have any improvements that I can make. That's the beauty of having this being built for the channel, is I can change anything I want. The weekly stuff was all added. There's a ton of stuff that went into it that was added after the initial guy got back to me with the spreadsheet and what he wanted it to look like. So I'm very happy with it. I think he did a good job, but I always will be happy to put more money into it if it's something that I think would improve it. So as always, thank you guys so much for watching. If you're interested in the total return on the RoundHill funds or the new RoundHill ETFs coming out, check out these two videos at the end of this one, and I hope to see you in the next video.